Payroll tax is the highest tax collected by the IRS. And I will tell you, you probably may not know this, but even if you file bankruptcy, you will still owe payroll tax personally, even if you close the doors. If you haven't paid your payroll tax on your employees, they will still come after you, regardless of filing a bankruptcy or not, because what the IRS does is they look at it as that's not your money. So technically it's stealing. You have a couple of things that you can do, but you cannot go back into the end of the year to the past year and buy anything or do any tax strategy to make sure you're documenting things after the end of the year. Before the end of the year, that is called tax strategy. Anything you're doing this year is tax strategy, such as looking at your entity structure, strategizing on owner's compensation versus dividends versus distributions, depending on what you are, and creating an estimated tax payment strategy each quarter so you aren't left guessing at what documentation to keep and what you need to do to make sure that you're keeping these documentations legally and taking the deductions legally. Make sure that you don't overpay the IRS, because I see that, way too often, that people get into this business for their family. Almost every slide presentation I see, as far as why people do what they do, is for their family. And that's what I want the money for you to go to, your family, not go to the IRS. And if I can help you, your family and yourself and your business and your employees, and making a difference to your community, then you will have fulfilled my dream.